Ladies and gentlemen, welcome back to the channel. Here in this video, we do have some news to go over in regards to AMC stock. Seems like maybe one good, one bad, maybe two bad, just depending on how you're looking at the situation. Now, we're also going to get into the Ortex data, Stonko tracker data, all of the data for this upcoming week. And I just want to discuss where I think stocks are going this week, right? Do I think this week's going to be a good week? Do I think it's going to be a bad week? And why? Let's get into it. We're going to look at the technicals as well, a couple other things also. So hit that like button and subscribe to the channel. Let me know what you guys think down below in the comment section. First things first, let's start with some of this news. So AMC stock alert. Macquarie issues big movie theater warning for 2024. Macquarie lowered its price target for AMC Entertainment to $8 from $9. The firm doesn't expect any movie in 2024 to surpass $300 million in sales. So we're not expecting any big movie. Says for 2024, Macquarie doesn't expect any film to generate more than $300 million in sales. The firm also provided a list of movies that are expected to sell well next year, such as Deadpool 3, Mustafa, The Lion King, and Joker 2. Meanwhile, Macquarie remains comfortable with its fourth quarter box office estimate of $2 billion for 2024. The firm forecasts $8.9 billion in sales, reflecting a 2% decline from its estimated 2023 numbers and a 22% decline compared with 2019. B. Riley analyst Eric Wold also recently provided his thoughts on AMC with a much higher price target. Earlier this month, he lowered his fourth quarter box office estimate to $1.87 billion from $2.16 billion. That would bring his 2023 box office estimate to $8.9 billion from $9.2 billion. For 2024, he expects box office revenue of $8.60 billion, down by a significant 10.5% from his prior estimate of $9.6 billion. So this hurt AMC a lot recently as well. The estimate for next year's number is going from 8.6 billion to or 9.6 billion down to 8.6 billion. That was definitely bad news. So we will see, but so far that just doesn't sound great. The analyst still remains positive about the industry. Quote, with our view that movie-going demand remains strong in the post-pandemic era and that a hiccup in 2024 is only a reflection of strike-driven production delays, we remain positive on the outlook for the industry. Wold carries a neutral rating on AMC with a price target of $15, implying an upside of about 120%. So, a lot of people just think this is a hiccup, right? This is just, a slow year because of the strike. The writers actors strike lasted like 6 months, so it was not a short or quick event. It actually took quite a while to work itself out. Now, this article is from Barron's. It says the second largest U.S. pension slashed its AMC stock stake. Says the California State Teachers Retirement System drastically reduced an investment in movie theater chain AMC Entertainment and trimmed positions in Chinese electric vehicle maker NIO, streaming content firm Spotify, and pharmaceutical firm Johnson & Johnson in the third quarter. CalSTRS, as the pension is known, disclosed the stock trades, among others, in a form it filed with the Securities and Exchange Commission. CalSTRS declined to comment on the specific investment changes. See, the total investment assets stood at almost $305 billion as of October 31st. CalSTRS sold 485,753 AMC shares in the third quarter to cut its stake to 145,246 shares. So that was a lot of selling of AMC stock. And what do we expect? Right? You're going to start hearing a lot more about this. Nobody likes dilution, right? Dilution just takes down your percentage of ownership in the company, right? And when AMC's management is diluting shareholders like nobody's business, when in all reality, they don't need to. That's not something investors are going to like, right? If the company is about to go bankrupt, that's a different story. If you're diluting shareholders, you have to. AMC's not in that position and they're diluting shareholders. People don't like that. So expect to see more articles like this one, more institutions selling out. I do think this last round of dilution was really a wake-up call for AMC that they can no longer dilute shareholders the way that they think. AMC is no longer a piggy bank like they think it is. Now, we are going to have some earnings as well this week. We talked about that in the last video as well. Couple notable names, obviously, are Neo, Tuesday pre-market, Dave & Buster's, Asana, Stitch Fix, Centennial One, Toll Brothers, Tuesday After Hours, Ollie's, Campbell's, Wednesday, C3 AI, GameStop. That's going to be your big one. GameStop, I mean, has the potential to move AMC big as well. You also have Dollar General Thursday morning. Dollar General has the potential to move the broader markets, depending on how the consumer is doing, whether they're doing good or bad. That could obviously be important as well. And then Broadcom, that's a chip name. They've done very well recently. Definitely, could move the markets, could move the broader chip industry. So that will be important. Now, another big thing we want to be watching this week is treasury yields. We do have some data coming out, quite a bit of data. Now, the 10-year treasury was down 14 basis points on Friday, down to 4.2%, or 4.20%, 4.20. This is something we want to continue to see fall, right? Back preferably under 4 into the 3s. Even back in like June, we were at 3.6% on the 10-year treasury. So you're still elevated from even where you've seen back in June. 6 months ago, we were a lot lower. Back here in April, you were at 3.28%. I mean, if you were to get down here, if you were to drop another 1% on the 10-year treasury, stocks are probably going much higher. So that's going to be a big driving factor in the week ahead is the 10-year treasury yield. Based on the economic data that we're going to get, some of your big data reports are in Michigan consumer sentiment, non-farm payrolls, the unemployment rate on Friday. You are going to get ADP employment change on Wednesday. And then on Tuesday, ISM services, PMI, and JOLTS job openings. So your big data is on Friday, which is a little bit unfortunate because, it's not going to matter what the markets do leading into Friday. If, Friday's good or Friday's bad, that could give you the biggest move for the entire week. Now, for AMC stock, I expect AMC is going to react as well to this data that we get to GameStop earnings. GameStop earnings are on Wednesday in after hours. Now, if GME does have good earnings and this, let's say GME goes up 20%, I expect AMC could go up 5 to 10%, somewhere in the 5 to 10% range. That would be my estimate. That's what I think is most likely. Right. I think GME is going to do well. I think that's a sympathy move with AMC stock also, especially if treasury yields are falling at that point. If the data on Tuesday with JOLTS job openings and ISM services come in good, and that's a bullish reaction in the markets, that could make the sympathy move from GameStop even larger potentially. Now you have a short interest of free float at 10.69%, $140.58 million worth of short positions in AMC stock. Days to cover 0.89. You do have, let's see, 21.14 million shares that are currently sold short. Shares out on loan, 15.38 million. Cost to borrow, 1.21%. Utilization of 37.38%. And a short score of 58.31 out of 100. Cost to borrow average at about 1%. Cost to borrow minimum slightly negative. Cost to borrow max at 14%. I think these numbers are far from accurate. I think these numbers are terribly inaccurate. So keep that in mind. I, in no way, shape, or form, think these numbers are true, not even in the slightest degree. Now, option activity over the past week, you had 36 orders from hedge funds and institutions, totaling $2.71 million with a positive order value of 53%. Volume on Friday was almost 90% to the calls, to the call side. Volume was about 10% to the put side. That's insane. Okay, that's just ridiculous. We'll take a look at some other numbers as well. But for this week, you got about 4,200 calls currently in the money, 58,000 calls out the money. You do have puts in the money, 8,500, puts out the money at about 20,000. Now, you could be setting up for a potential gamma squeeze as well. If you look at December 8th, the option chain, you do have about 12,000 for open interest at the $7 call. The $7.50 call has 11,554. And the $8 call has 11,300. Then you have 4,000 at the $8.50, 6,300 at the 9, 2,000 at the $9.50, and about 3,500 for open interest at the $10 call. So this is almost 2 million shares, 1.5 million shares, 1.3 million shares. That's a lot of shares that would need to be bought. From $7 to $8 in the options market, right? Based on that gamma of hedging out those options trades. Now, that's let alone what the numbers look like to actually start Monday, because a lot of the data does not aggregate for the Friday trading day. So these numbers are going to change coming on Monday. And then what about throughout the rest of this upcoming week? That could be pretty explosive as well. So, consider that, take that into consideration as well. Could be setting up for a gamma squeeze if Wednesday's earnings are good for GME. And I think it's simple right now. We got dilution. Markets are getting over that. I think they've gotten over that. Now we're in a environment where I think, markets are getting over it, and you're very oversold. You've basically been falling for weeks now, from $11.40, 50 cents, down to $6.50. Yeah, I mean, it makes sense because we got dilution, but at this point, if the dilution is over, maybe it's time for a rally. And usually you do get this base out effect after dilution, what we've seen, over different times of dilution. You kind of fall, you get the base out effect, and then you start to make just very large, unprecedented moves higher, right? We went from $7 back here to $11.50 within the course of like a week, right? I don't know if that's going to happen this week. I don't know if it's going to take a while, but I think at some point we will get another rally like that. And at some point, hopefully here soon, we start to get the data from the short positions to see who is short and how long they've been short. All of that, the collateral that's being used. So that will be exciting. Looking forward to that one. But nonetheless, this week, I'm expecting a pretty good week. You are in the process of seeing this great shift of capital, which is money going from money market funds, going from treasuries, going from cash on the sidelines, maybe even big tech stocks, and making its way into stocks that will benefit from rates going lower. Small mid-cap stocks, even a stock like a Tesla is going to benefit from rates going lower big time. But small and mid-cap stocks as well. AMC is in that category. Maybe if rates went down like we're expecting, 5 to 6 rate cuts, maybe that means AMC has a greater chance of surviving and thriving. Maybe that means AMC can refinance their debt or issue new debt at, lower percentages, right? And that would obviously be fundamentally positive for AMC stock. So we'll see. Nonetheless, let me know what you guys think about this upcoming week down below in the comment section. Thank you for watching. Enjoy the rest of your day. I will see you in the next one.